traditionally, US core investment has been very, very domestic in nature. They've saved up Europe and Asia for more opportunistic value-added investment. What we're seeing now is that they're actually using Europe as an extension for a core strategy. I think that the reasons for that are twofold. Firstly, that returns in the US, which have been in the high teens for the last few years, are going to be more benign, and there's some significant downside risk. Whereas if you look at the European market, similar situation, or they were probably ahead in terms of market correction. And what they're now seeing is that we've got enough sophistication, or at least the same level, or perhaps more sophistication in Europe, and actually you can extend your investment horizon to Europe, get greater diversification, and actually mitigate some of the downside risks that you might get in the US by covering Europe as well. And you have to bear in mind that allocations to real estate are unlikely to change significantly in the US. And we're talking to a number of institutions, and they've got significant unsatisfied real estate allocations. And if that's the case, and you're looking at a situation in the US where the downside is greater than perhaps elsewhere, then they've got to look at other markets. And if they can see the same level of transparency, efficiency, performance, reporting as they do domestically, then there's a natural reason for looking to other markets. And the core markets in Europe, particularly, the UK, France, Germany, are ones which I think will be a focus for more investment for that capital. I think transparency in terms of European markets, well, clearly the UK is probably the most transparent globally. I think if you're looking at other markets in Europe, France, Germany, for example, perhaps less transparent, but at least they have sufficiently robust information and data within those markets to be an acceptable investment location for this sort of capital. Well, I think unlike US in terms of allocations, which tends to be sectorally driven, in terms of offices, retail, industrial, or multifamily, I think if you're looking from a European perspective, it tends to be much more on a country bias rather than a sector bias. So we're not seeing any particular view in terms of sectors, but we're certainly looking at the core markets, the ones which are the most mature ones in Europe, as being the focus.